Today I'm talking about
Welcome to part 2 of Overlooked Deductions. Today I'm talking specifically about worthless inventory. Now, what is worthless inventory? So let's say you're in the business of buying and selling products. You buy something to sell it. When you buy this product for resale, that product is called inventory. Now, sometimes you might think like product A might sell, and so you buy tons of product A and you put it up, nobody's buying it. You cut the price, nobody's buying it. You have a Black Friday sale, and nobody's still buying. You pretty much give the thing away for free, and nobody's buying. At that point, your inventory is probably worthless. Nobody wants it. So what do you do with this inventory? What can you do? Are you still going to pay taxes on the amount that you never even claimed as expenses? Like, what can you do? What can you do to help you? So you, at least since you didn't make the sale, what can you do to help you reduce that outflow? The first thing you can do is say, thank you, 2018 Job Tax Act, because guess what? In 2018, you no longer have to accrue your inventory. You don't longer have to capitalize it and put it on the balance sheet statement. You can now recognize the expense as you pay, just like any other material and supplies. Now take a look at here, cash basis, accrual basis. You can see, even though revenue is the same, expenses, which is based on the cost of goods. So here we can see the beginning and end inventory is 10,000 and 60,000. Here we just have the about 5,000 in the accrual basis. In the cash basis, we'll have 55,000 because that's how much cash actually went out. Net income in the cash basis is 45,000. The accrual basis is 95,000. So in this case, the cash basis actually works out when there's inventory, because guess what? I no longer have to wait till I sell my inventory to recognize it as an expense. That's a huge saving. So that's the first thing you might want to look to do to see, okay, can I save by doing the cash basis of inventory versus the accrual basis? So let's say you don't want to switch over to the cash basis. You just like, I like doing things exactly the same way I've always done it. I don't like change, even if it benefits me. Believe it or not, there are people like that. So if you're that way, no problem. That's good for you. There's something else you can do. You can give the excess inventory to charity, because there are people that would need that product but might not be able to pay for it. So if you choose to do that, let's see what happens. It was $50,000 worth of worthless inventory. So if you give $50,000 away, you have $10,000 left. Cost of goods sold becomes, the amount during the year becomes $55,000. So you can see both on the book cash basis and accrual basis, we're now at $45,000 net income. We're still at the same place without having to change our methods. Another thing you can do is sell to a business that specializes in buying assets that you want to liquidate, inventory you want to liquidate. So basically, they buy for pennies on the dollar. So if something is worth $1, they might pay a penny for it. So you can look for these companies and you can sell to them. So what happens is when you sell to these companies, they might have more marketing power than you and might be able to sell it when you couldn't sell it. So you will get some revenue from it, but it won't be that much. So in this case, let's say the $50,000 worth of inventory, you sold it for $5,000. So your revenue is going to increase by $5,000 in that case. And then, your ending balance of your inventory is still $10,000. Your cost of goods sold is still $55,000. So here we can see both on the book cash and accrual basis, we still have $50,000 worth of net income. Income rose by the income we received $5,000, but hey, we got I'd rather pay taxes on $5,000 than totally lose $5,000. So to me, I think it's a good option. If you can get a liquidating business that can take your inventory from you when it's not selling, hey, the more power to you. Hey, are you still here? What are you still doing here? Go look at your financials. Go look at your inventory. Go take stock. What is not moving? Do you need to sell anything? Do you need to give anything to charity? You need to take action now before year end comes. Here it is in November. December will be here and gone before you know it. It will be too late to do anything by then. So go ahead, go take inventory now and take any action that needs to be taken now. To help you see the effects of any transactions you might take, go ahead and download the Excel file by clicking the link below. Like what you see? Go ahead and click the subscribe button on the very bottom of this video. I look forward to seeing you in future videos.